Why is the RMB depreciating again? Date: January 13, 2025.
The recent depreciation of the Chinese Renminbi RMB has sparked considerable interest and concern among economists, policymakers, and investors worldwide. Analyzing the reasons behind this depreciation reveals a complex interplay of domestic and international factors.
1. Economic pressures and trade risks. Recent reports from Reuters indicate that Chinese authorities are contemplating further depreciation of the RMB as a strategic response to escalating trade risks and mounting economic pressures. The context of rising interest rates in the United States and growing global economic uncertainty has contributed to increased downward pressure on the RMB. By allowing for a weaker currency, China aims to enhance its export competitiveness, facilitate international trade denominated in RMB, and reduce dependence on the US dollar. The potential for a weaker RMB comes at a time when trade relations with major partners, particularly the United States, remain strained.
The depreciation may serve as a mechanism to offset the impact of tariffs and trade barriers, thereby protecting Chinese exports from becoming prohibitively expensive in global markets.
2. The Belt and Road Initiative and RMB internationalization.
A pivotal aspect of the RMB's trajectory is linked to China's Belt and Road Initiative (BRI), launched in 2013. This initiative was designed to promote the internationalization of the RMB, reducing reliance on the dollar. However, the goal of making the RMB a global reserve currency has faced significant challenges, particularly due to capital outflows and heightened control measures by the Chinese government. A recent article from Georgetown University highlights that the anticipated internationalization of the RMB has become increasingly complicated. Frequent capital outflows have led the Chinese government to tighten capital controls, limiting the free movement of currency across borders.
Consequently, the ambition for a fully internationalized RMB has been recalibrated towards enhancing the use of the currency in cross-border trade settlements instead of pursuing a complete de-dollarization strategy. 3. Historical context, lessons from 2015 to 2016.
The events surrounding the RMB depreciation in 2015 and 2016 serve as a crucial backdrop for understanding the current situation. In 2015, the People's Bank of China (PBOC) allowed the RMB to depreciate in response to market pressures and capital flight. This led to significant volatility, with a subsequent speculative attack on the currency in 2016, prompting the government to impose stricter capital controls.
The aftermath of these events shifted the box approach to currency management.
Post-2016, the RMB has operated under a dirty float mechanism where the currency's value is allowed to fluctuate based on market conditions, while the PBOC intervenes selectively to prevent excessive volatility.
As a result, since 2016,
China's foreign reserves have stabilized at around $3 trillion, indicating a cautious approach towards maintaining currency stability despite the depreciation pressures.
4. Current market sentiment and speculative pressures. As of late 2024, market sentiment has turned bearish on the RMB.
Analysts suggest that concerns over China's economic growth prospects, exacerbated by the ongoing tensions with the US and potential sanctions, have led to increased speculative selling of the currency. The combination of unfavorable economic data and geopolitical risks has prompted investors to reassess their positions, further contributing to the RMB's depreciation.
5. Capital controls and future prospects. Chinese authorities have historically maintained strict capital controls to mitigate the risks associated with currency volatility. The reluctance to fully liberalize capital flows stems from fears of another financial crisis similar to what was experienced in 2015 and 2016. As a result, despite ongoing discussions about RMB internationalization,
the government is likely to continue emphasizing trade settlements in RMB while keeping capital controls in place.
The future trajectory of the RMB will be influenced by several factors, including global economic conditions, US monetary policy, and China's domestic economic reforms.
There is an acknowledgement among policymakers that while de-dollarization remains a long-term goal, immediate strategies must focus on stabilizing the currency and managing external pressures.
Conclusion.
In summary, the recent depreciation of the RMB can be attributed to a confluence of global economic dynamics, domestic policy responses, and historical experiences with currency management.
While the aspiration for a more internationally recognized RMB persists, the path forward necessitates a careful balance between liberalization and control to safeguard economic stability.
As China navigates these challenges, the focus will likely remain on promoting the use of the RMB in trade while mitigating the risks associated with capital flight and speculative pressures.
The coming months will be critical in determining the efficacy of these strategies and the RMB's role in the global economy.
The depreciation of the renminbi RMB has become a focal point of discussion, drawing attention from various analysts and commentators due to its intricate and multifaceted nature. The reasons behind this trend reveal a blend of domestic and international factors that may not be immediately apparent. One of the more counterintuitive aspects of the RMB's depreciation is the Chinese government's potential willingness to allow the currency to weaken in order to bolster its export competitiveness.
Reports indicate that Chinese authorities are contemplating further depreciation as a strategic response to mounting trade risks and economic pressures. This contradicts the expectation that a stable or appreciating currency would be preferred to maintain investor confidence.
Instead, the depreciation may be seen as a calculated move to stimulate exports by making Chinese goods cheaper on the international market, thereby addressing trade imbalances and strengthening the economy despite the associated risks to currency stability. The international context of the RMB's depreciation also includes the impact of U.S. monetary policy, particularly the Federal Reserve's decision to raise interest rates. This shift has placed additional downward pressure on the RMB as higher U.S. interest rates tend to attract capital flows into dollar-denominated assets, creating a further disincentive for investment in the RMB. Interestingly, while many might assume that a strong U.S. dollar would directly lead to a weaker RMB, the situation is more nuanced.
The RMB's depreciation can also be interpreted as a response to the need for China to manage its economic transition amid global uncertainties rather than a mere reaction to U.S. policies. Moreover,
the aspiration for RMB internationalization through initiatives like the Belt and Road Initiative (BRI) has faced significant challenges, particularly due to capital outflows and stronger U.S. sanctions. This situation has led to a tightening of capital controls, which paradoxically may hinder the very internationalization that China seeks. The goal of reducing dependency on the US dollar is complicated by the necessity of maintaining internal economic stability. As a result, while China aims to promote the use of the RMB in international trade, it must balance this aspiration with the practical need to control capital flows and mitigate risks to its financial system. The speculative attack on the RMB in 2016 serves as a historical reference point that highlights the complexities of currency management. Rather than achieving greater RMB stability, the aftermath of this event led to increased volatility and a shift in policy towards a dirty float exchange rate system. This change illustrates a counterintuitive reality. While the government initially aimed for a stable currency to foster confidence, the unexpected consequences of external pressures and domestic behaviors necessitated a more flexible approach. This flexibility may contribute to ongoing fluctuations in the RMB's value, which could be perceived as instability but is in fact a reflection of a more responsive monetary policy. The maintenance of substantial foreign exchange reserves despite recent depreciation also reveals a counterintuitive element. While many might expect that a depreciating currency would lead to a depletion of reserves, China has managed to keep its reserves relatively stable at around $3 trillion. This situation suggests that the government retains significant tools for managing the currency and could intervene if necessary. However, the willingness to allow depreciation indicates a strategic choice rather than a sign of weakness.
Lastly, there is a broader narrative surrounding China's approach to de-dollarization and the promotion of the RMB. Instead of pursuing a radical shift away from the dollar, China seems to be adopting a more cautious and pragmatic stance. This approach includes fostering cross-border trade settlements in RMB while simultaneously managing capital controls. The idea that China is moving towards a greater reliance on the RMB in international trade while still maintaining strict control over capital flows reflects a tension between ambition and practicality. In conclusion, the dynamics surrounding the depreciation of the RMB illustrate a series of counterintuitive trends: the potential strategic embrace of depreciation for competitive advantage, the nuanced effects of external monetary policy, the complexities of capital control in the face of internationalization goals, the lessons from past speculative attacks, the maintenance of foreign reserves amidst depreciation, and a cautious approach to de-dollarization. Each of these factors contributes to a broader understanding of the RMB's current trajectory and the challenges that lie ahead for China's economic policymakers. The depreciation of the renminbi RMB has garnered significant attention, yet several nuanced factors contributing to this phenomenon are often overlooked. Understanding these complexities is critical not only for economists and policymakers but also for businesses and investors engaging with the Chinese market. 1. The role of trade risks. One important aspect frequently underestimated is the extent to which global trade dynamics influence the RMB's value. Reports indicate that Chinese authorities are contemplating further depreciation to mitigate trade risks and economic pressures, particularly in light of escalating tensions with the United States. The notion that currency depreciation can enhance export competitiveness is a long-standing economic theory, however. Its real-world implications are multifaceted. While a weaker RMB may boost exports, it can also lead to retaliation from trading partners, exacerbating trade disputes and potentially triggering a cycle of competitive devaluations. This broader context of trade relations is essential for grasping the potential repercussions of RMB depreciation. 2. Impact of U.S. monetary policy. Another significant yet overlooked factor is the correlation between the RMB's performance and U.S. monetary policy, particularly the Federal Reserve's interest rate adjustments. As the U.S. raises interest rates, capital tends to flow out of emerging markets like China, creating downward pressure on the RMB. The critical point here is the psychological effect on market participants. Perceptions of a weakening RMB can lead to further capital flight as investors seek to avoid losses. This self-fulfilling prophecy is crucial for understanding the dynamics of currency depreciation. Yet it is often simplified in discussions that focus solely on quantitative economic indicators without addressing the qualitative market sentiment. 3. Capital control measures. The historical context of China's capital controls is another vital element that is frequently sidelined. Since the speculative attack on the RMB in 2016, the Chinese government has implemented stringent capital control measures to curb capital outflows. These controls are significant because they reflect the government's recognition of the potential destabilizing effects of a free-floating currency in a volatile economic environment. The narrative around capital controls often centers on their restrictive nature, however, they also serve as a stabilizing mechanism. Protecting the domestic economy from external shocks. The balance between maintaining capital controls and promoting currency internationalization is a delicate dance that is often oversimplified in analyses. 4. The shift in internationalization strategy. The shift in China's approach to RMB internationalization is another critical content area that can be easily overlooked. Initially, the Belt and Road Initiative (BRI) aimed to promote the use of the RMB globally. However, as geopolitical tensions have intensified, China has recalibrated its strategy to focus more on bilateral trade agreements and cross-border yuan-denominated trade settlements. This shift represents a pragmatic response to the realities of international finance. Yet it signals a retreat from the ambitious de-dollarization goals previously set forth.
Understanding this strategic pivot is essential to grasping the future trajectory of the RMB and its role in the global economy. 5. The psychological aspect of market sentiment. Market psychology plays a crucial role in currency valuation, yet discussions often reduce it to mere speculation or volatility. The depreciation of the RMB can create a perception of weakness that may deter foreign investment, leading to a vicious cycle of depreciation and reduced confidence. Investors' perceptions of the RMB as a safe currency are critical, especially given the historical context of speculative attacks. The psychology of the market can sometimes outweigh fundamental economic indicators, making it imperative to consider how sentiment influences currency movements. 6. Domestic economic conditions. Lastly, the interplay between domestic economic conditions and the RMB's value is frequently underexplored. Factors such as manufacturing output, consumer spending, and overall economic growth significantly impact the currency's strength. The current economic pressures within China, including slowing growth rates and rising unemployment, contribute to a weaker RMB. However, the focus often remains on external pressures, neglecting the critical role of domestic economic health in determining currency strength. This oversight can lead to misinterpretations of the RMB's depreciation as purely a response to external factors rather than a complex interplay of internal and external influences. Conclusion. In summary, the depreciation of the RMB is a multifaceted issue influenced by trade risks, U.S. monetary policy, capital control measures, shifts in internationalization strategy, market psychology, and domestic economic conditions. Recognizing these interconnected factors allows for a more nuanced understanding of the RMB's trajectory and the broader implications for global economics. As global financial systems continue to evolve, paying attention to these details will be crucial for stakeholders navigating the complexities of international trade and investment in China. 1. Global economic environment and U.S. monetary policy. The depreciation of the RMB is significantly influenced by the global economic environment, particularly the monetary policy of the United States. As the U.S. continues to raise interest rates, the cost of holding RMB increases, leading to reduced confidence in the currency. This phenomenon creates downward pressure on the RMB as investors seek higher yields elsewhere, particularly in U.S. assets. The Chinese government may consider further depreciation of the RMB to boost export competitiveness and shift international trade towards transactions denominated in RMB, thereby reducing reliance on the US dollar. This strategic move aims to counteract the economic pressures stemming from US monetary tightening and global uncertainty. 2. Capital outflow and government policies. Since the implementation of the Belt and Road Initiative (BRI) in 2013, the Chinese government has faced challenges regarding capital outflows. The frequency of capital flight has prompted the government to tighten capital controls, making it more difficult for companies and individuals to transfer money abroad. This has complicated China's goal of RMB internationalization. The shift from a focus on de-dollarization to developing cross-border RMB settlement systems illustrates the government's response to these challenges. The speculative attack on the RMB in 2016 reinforced the need for stricter capital controls and led to a more cautious approach to currency management, limiting the effectiveness of the RMB as a global reserve currency. 3. Historical context and currency management. The history of the RMB's valuation and management reveals critical lessons for understanding its current depreciation. The 2015 to 2016 speculative attack exposed vulnerabilities in China's currency strategy, forcing the People's Bank of China (PBOC) to adopt a dirty float exchange rate mechanism. This approach allows the RMB to fluctuate according to market dynamics while also enabling the PBOC to intervene as necessary. The relative stability of China's foreign reserves since 2016, despite the depreciation pressures, indicates that while the RMB is under strain, the government has maneuverability to manage its value without resorting to extreme measures.
This historical context underscores the delicate balance China must maintain between encouraging currency use in international trade and safeguarding against financial instability. 4. Future strategies and de-dollarization goals. Looking ahead, China's strategy regarding the RMB involves a shift towards promoting its use in trade rather than pursuing full de-dollarization. The current focus is on facilitating trade settlements in RMB, particularly with countries participating in the BRI. However, without fully liberalizing capital flows, China's ability to successfully position the RMB as a global alternative to the dollar remains limited. The specter of U.S. sanctions exacerbates this situation, compelling China to adopt a more cautious approach. While there is a clear intention to enhance the RMB's global standing, practical limitations imposed by capital controls and the prevailing geopolitical landscape suggest that immediate de-dollarization is unlikely, leading to a risk management strategy that prioritizes stability over ambition. These 4 points encapsulate the complex interplay of domestic policies, historical precedents, and international economic pressures that contribute to the ongoing depreciation of the RMB, while also highlighting the challenges and strategies that will shape its future trajectory. 1. The fall of the British pound. In the 1960s, the British pound underwent significant depreciation during the 1960s, primarily due to mounting economic challenges including inflation, trade deficits, and the costs associated with maintaining the UK's global military commitments. The devaluation of the pound in 1967 was a response to pressures similar to those faced by the RMB today, including external economic pressures and a need to bolster export competitiveness. The decision to devalue aimed to address the balance of payments crisis, reflecting the complex interplay of domestic and international economic factors. 2. The Asian financial crisis of 1997. The Asian financial crisis was characterized by a rapid depreciation of currencies in several Southeast Asian countries, including Thailand, Indonesia, and South Korea. Initially triggered by the collapse of the Thai baht, the crisis spread rapidly due to a combination of factors including excessive foreign borrowing, speculative attacks, and weaknesses in financial sectors. Similar to the RMB's situation, the crisis highlighted vulnerabilities in capital flows and the impact of external economic conditions, prompting affected countries to implement stringent capital controls and seek international assistance. 3. The Argentine peso crisis. In 2001 to 2002, Argentina experienced a severe currency crisis that led to the collapse of the peso, which was pegged to the US dollar. The crisis resulted from a combination of fiscal mismanagement, external debt, and a rigid exchange rate regime that could not withstand external shocks. The depreciation of the peso led to significant economic turmoil, social unrest, and a re-evaluation of Argentina's monetary policy. The Argentine case is analogous to the challenges faced by the RMB, where external pressures, capital controls, and the struggle for currency stability are central issues in managing national economic interests. Future outlook, predictions for the Renminbi-RMB depreciation. The depreciation of the Renminbi-RMB has become a focal point in global economic discussions, reflecting a complex interplay of domestic and international factors. As we look toward the future, several predictions can be made regarding the trajectory of the RMB, its international role, and the broader implications for the Chinese economy and global markets. 1. Continued RMB depreciation. In the short to medium term, the RMB is likely to experience further depreciation. This trend is driven by several factors. Interest rate differentials. With the U.S. Federal Reserve expected to maintain higher interest rates to combat inflation, capital will likely continue flowing towards U.S. assets. This will place downward pressure on the RMB as investors seek higher returns in U.S. dollars. Economic challenges in China, sluggish domestic growth, ongoing trade tensions, and geopolitical risks will challenge the RMB's stability. If economic indicators do not improve, the Chinese government may be compelled to allow further depreciation to stimulate exports and maintain competitiveness. 2. Shift in currency policy. China's currency policy is expected to evolve in response to both internal and external pressures. Regulatory adjustments. As the government faces mounting pressures from capital outflows and speculative attacks, it might implement stricter capital controls. These measures could include limiting the amount of RMB that can be converted into foreign currency, thereby stabilizing the domestic currency but potentially hampering foreign investment. Focus on trade settlement. China's strategy may increasingly focus on promoting the RMB for trade settlement purposes rather than fully embracing de-dollarization. By encouraging international partners to use the RMB in bilateral trade, China can reduce its reliance on the dollar without fully liberalizing its capital account. 3. Enhanced internationalization efforts. Despite the challenges, China is likely to continue pursuing internationalization of the RMB, albeit cautiously. Bilateral agreements. China will likely expand its network of bilateral currency swap agreements and promote RMB-denominated trade deals, especially with countries involved in the Belt and Road Initiative (BRI). This approach will help create a more substantial demand for the RMB in international markets. Central bank digital currency (CBDC). The rollout of China's digital currency could play a pivotal role in promoting the RMB globally. A successful deployment of the digital currency electronic payment (DCEP) system could facilitate cross-border transactions, making it easier for international partners to engage with the RMB without the complexities of capital controls. 4. Geopolitical implications. As the RMB's role evolves, geopolitical dynamics will also shift. Response to sanctions. China's strategy of RMB internationalization is partly driven by the desire to mitigate risks associated with U.S. sanctions. As geopolitical tensions continue to rise, particularly with the U.S., China may prioritize the development of alternative payment systems that bypass the dollar-centric global financial architecture. Global economic alliances. The future of the RMB could also hinge on China's ability to forge economic alliances with other countries seeking alternatives to the dollar. As emerging economies look for ways to reduce their exposure to U.S. monetary policy, they may increasingly turn to the RMB as a viable alternative. 5. Potential for financial market volatility. As the RMB navigates through this period of adjustment, financial market volatility is expected. Speculative behavior. Investors may respond to ongoing uncertainty with speculative trading, leading to increased volatility in RMB exchange rates. This could complicate the Chinese government's efforts to stabilize the currency. Impact on Asian markets. A depreciating RMB could have spillover effects on other Asian currencies, particularly those that are closely tied to the Chinese economy. Countries heavily reliant on exports to China may experience currency pressures, further complicating the regional economic landscape. Conclusion. The future of the RMB is likely to be characterized by a delicate balancing act between promoting internationalization, managing depreciation, and navigating geopolitical tensions. While the depreciation might provide temporary relief to the Chinese export sector, it also poses risks of financial instability and increased scrutiny from international investors. As global economic dynamics continue to shift, the RMB's role on the world stage will be pivotal in shaping the future of international finance and trade. Ultimately, China's ability to adapt to these challenges while strategically promoting the RMB will determine its success in establishing the currency as a significant player in the global economy.